All right. What is going on, ladies and gentlemen, and beautiful people? If you can see my screen and if you can hear my voice just fine, do me a favor and type 555 in the chat. If you can see my screen and if you can hear my voice just fine, let's get to it. What's up, Brian? What's going on? See, we got iPhone on the line. All right, Felix, I see you. And let me know where you guys are opted in from. What city, what state, what town, what part of the world you in, which country. Because sometimes we have people from all around that's on here. And so we got Brian from MIA. Shout out to Brian. MIA is in the building. We got NYC in the house as well. We got Tampa. I'm actually out in Tampa right now. I'm at my pop's place. I'm going to be here for about a week. So I set up this little office in here in the meantime, helping my pops with some stuff. You know, he's been doing eBay since 2007, and he's a beast with it. Felix is from Lake Wales, Florida. That's what's up. We got New Jersey in the house. What part of Jersey? North Jersey, South Jersey. Talk to me, y'all. All right. So we got people from everywhere over here. Lake Worth. All right. I see you, Doug. Nice, nice. All right. So we're about to start this. Since I do have a green screen in the back, let me switch up the camera on you guys. All right. There we go. And boom. Let me stop sharing this right here. All right, and now y'all should be able to see that. Let me make this a little bigger. All right, everyone can see this, right? Let me kind of get myself out of the way so you guys are not having like some kind of crazy mirror effect. Let me close this out.
Yeah.
There we go. All right, let me pop up the chat too for a second. Yeah, I don't want to have a mirror effect, so I'm gonna have the chat right over here on the side. All right, we got Eric from New Mexico in here as well. That's really, really cool. All right, y'all. So look, I'm ready to get to it. And a little earlier today, I was talking about correlation, right? I was talking about correlation on my main page. Hold on one second, 'cause I'm starting to hear some background noise. Real quick, y'all. So I'm gonna get through the stuff first. And then I'm going to open up the floor for Q&A. 1 second, y'all. Let me just make sure. All right. Yeah, so I'm going to open up the floor for Q&A a little bit later. But in the meantime, I'm going to get through this lesson. So, you know, I was talking a little bit about correlation earlier today. Gold and US dollar has a negative correlation. So what that means is usually if one instrument is doing something or one asset is doing something, the other is doing the exact opposite. That's what you call a negative correlation. But a pair like Euro USD along with GBP USD, they have positive correlation, which means over 80% of the time, sometimes even identical, they are moving very, very similarly. Now, in a way, it's important for us traders to understand, right? Because some brokers, some platforms allow you to, have multiple trades on the same asset, on the same symbol, on the same, on the same asset on the same symbol, right? But there's some other brokers where, let's say if I have 5 mini lots on Euro USD on one trade, and on another trade I have 2 lots on the same thing, Euro USD. Some platforms, not every platform, and most platforms don't do this, but there are some platforms that would just add all the lot size together and just kind of share one position and whatever, and that's kind of whack, right? Nadex did that to me a bunch of times, and and there's other brokers that do that. Some of you never really had to face that, because prior to 2015, there was traders, there was forex traders, but it wasn't as many as there are today. So correlating pairs is good to understand, good to know, especially if you want to kind of trade the same thing but in different ways, right? So that's one thing that I was covering earlier today. So as we can see over here to the left hand side, gold shot up, okay? And over here to the right side, this is USD doing the exact opposite, making similar movements, but in the exact opposite way because they have negative correlation. Just wanted to, bring that to your attention. I'll do more on this lesson next week, but what we're going to get into today is one of my favorite strategies, all right? One of the strategies that really took me to another level, and a strategy that I think, is going to do well for you. And I'm going to kind of erase everything on this chart, and I'm going to start from scratch, right? Because I do feel like it would be good for everyone here to learn a little something. I know some of you are experienced, but some of you have no idea what's going on, and that's fine. So I'm gonna do a little bit of both. I'm gonna mix a little bit of both stuff. And I'm gonna clear everything on here. So I'm gonna clear out the drawings. I'm gonna clear out the indicators, so on and so forth. It is 8:10 p.m. Eastern Standard Time. So right now we are in Sydney overlapping with Tokyo session. All right. So right now the most volatile currencies usually, right, at this time is going to be NZD, AUD, and JPY. And that's just the ones that we trade with our allies. Of course, you have the China Yuan that's active at this time. We have other exotic currencies worldwide that are active at this time. But as far as generic Forex is concerned, NZD, AUD, JPY is what we got to look for. Now, before we begin any kind of trading, right? And I know we got some experienced cats on here, but let me speak to my peoples that are just, they just joined this, and they want to see what's really going on. Before you do anything, it's always best to take a look at the economic calendar just to see if there's anything going on for today. So today is weak as hell. Today is very weak as far as the economic calendar is concerned. Really nothing, happened, but it looks like it's all good updates pertaining to these currencies. We had a medium-sized update on the USD during New York session, right at the bell at 8:30 a.m. Okay, so positive news on that, and also on the Canadian dollar. Sometime during the London session, all right, we had 2 updates on Euro, one on the Swiss franc, and they were all positive. So that's pretty good, but not really too much volatility caused by the economic calendar today. So when this happens, we're gonna, really pay attention to just our technicals. Tomorrow it's gonna be a little different, right? And so throughout the week, all right, you're gonna see, a few more things that are a little different. A couple of heavy updates coming on Wednesday on USD. Only 2 updates happening at the opening bell. Tomorrow, New York session. As far as today is it's quiet. It's crickets. It's crickets out here. So all right, let me X this out, and we are gonna go right into the charts. Okay. Let's go into USD JPY. All right, that's a good start for me. Let me erase everything here. Take everything out the way. All right, now high time frames is what really matters as far as strong confirmation is concerned. Higher the time frame, the stronger the confirmation, right? And the stronger the levels that it hits. So, for example, I could just look with my eyes and tell you there are some insanely strong levels. So, for example, look over here, 147.100, right? 147.100, all right, it's a major area, okay? A lot of activity in that area. When we look over here, we rounding off to these numbers. Look, 149.400, right? Look at this, rounding off to these institutional numbers, and there's a lot of activity flowing, right? So high time frames definitely do matter, okay? And this is just the 1 hour, right? Let's go up to the 4 hour, and let me pinch this in. Okay, now you can see something Now you can see. Now you see a lot more as we zoom out. We get to see a lot more. And whenever we look to the left, the market is telling us a story. The market is telling us, yo, we're up over here and we're going down over here. Okay? Or we might see some flip zones. All right? A little bit of both. A little bit of support and resistance at the same damn time. You're going to see this happen again and again and again and again. Nothing too different when it comes to the markets. Look over here. Look, 162 flat, right? 162.0000, right? Very strong level. A lot of activity down. 148.500. Same thing. All right? 149.400. All right? These round numbers are institutional levels. It attracts a lot of buyers and a lot of sellers. You also have to think. There are certain platforms, like, for example, binary options platforms like Nadex, Crypto.com. You have, futures. You have, all kinds of different ways you can trade. And there's all kinds of different platforms associated with that. The round numbers happens to attract a lot of traders to bring in some plays, right? Now the strategy that I'm going to show you is going to be simple. It's going to be a simple consolidating based strategy, but we're gonna do so in a way where we're keeping the institutional levels in mind, right? Because the average Joe is going to be using my strategy, which I taught all around, and it's been carried on through, different new generation based traders. They don't even know where they learned it from or who the people that taught them learned it from, right? But bottom line is I'm going to teach you in a way where you're going to do so like a pro as opposed to like a hoe. I don't know, I just feel like saying that, right? But we're going to separate the pros, right, from the people that have no idea what's going on. Okay, so look, this is what we're going to do. Right here, let's go to the weekly. I'm going to pinch this in. And you can do this with any symbol you want, right? We're going to zoom all the way out on the weekly, right? And we're going to mark up these levels. All right, and once you set it, you don't have to adjust it unless you really need to, right? Unless the market is shifting and you need to adjust these levels, you could, for the most part, just keep them as is, right? And just stay on that for a long time. Right here, let me bring a horizontal ray. I like the horizontal ray. For example, if I did a horizontal line, it'll make my chart look a little more busy, and the horizontal line will just keep extending everything to the left. There's no point to that, right? I wanted to start where I wanted to start, and that's it. So the less my chart looks busy, the better. So I use horizontal rays only. I know sometimes the little things, it's just like, oh, okay, yeah, I knew this stuff. But for the newest trader, sometimes, the little things, matter, and it makes things a little easier for them. All right, so I'll mark my high points. I'll mark my low points. You can start, low and go up, or you can start high and go down. There's no point for me to really mark this, this sharp trend over here. As you see, it's probably an insane angle. Look how sharp this thing is. Use the trend angle over here. This is extremely sharp. It's an 80 degree, okay? 80 degree angle right there. All right, so that's pretty sharp. 90 degrees is just straight down, right? So if it's 80, it's a pretty sharp drop or a sharp rise, depending if it's downtrend or uptrend. In this case, it's downtrend. So as you can see, there's a very, very, very strong downtrend over here. I don't need to draw old trend levels that are irrelevant today. All right, so I'm just gonna start off with this. Okay. And we could see that the first time the market tested this high, right, as a resistance, okay, this was around November 10, 1986, right? It went kind of close to this area again around 1990. Okay, so that's 4 years later. All right, so from 86 to where this is right now, July 2024, from 1986 to this point right here, okay, we're talking nearly 40 years. This is 38 years. All right, so this is a 38-year high right now. So of course, the market reacts, and what is it gonna do? It's gonna drop. If it ain't gonna break, it's gonna drop, right? So this is a level that's basically a 40-year level, a 38-year level. We need to pay attention to these things as as they come. So, anyways, let's bring it in a little bit. Okay, and what can we see here? Let's zoom in and let's pinch out on the exchange rates over here. Okay, and if your eye is already trained, then you could kind of see like why this would bounce, right? You're gonna see some of the same things again and again and again. If we use fibs in this example, okay, we take it from wick to wick. Look how the market, it comes up here, all right, and it starts dancing around the 618. Starts dancing around the 618. Market reacts and then goes up, all right, hits this extremely high point, and now it's starting to come back down. So these are reactionary levels right over here, all right, as we can see, okay? And the market moves in zigzags. So if the market is gonna go, if the market is gonna move up, right? The market actually, let me pull out. All right, the market is gonna move in zigzags. That's what it does, and it's always gonna do that to the end of time. It's almost never gonna stop. Okay, so when the markets move, if it goes up, it's going to go up in a zigzag. It's never going to go up in a straight line. It's never going to do that. It's going to go up this way, okay? And when the market goes down, it's going to go down in zigzags. It's just what it is, all right? It's just what the market does. It's not going to be perfect, okay? But we need to be able to anticipate this stuff, okay? So as the market goes up, all right, it's going to start to create higher highs and higher lows. Okay, and it's going to make these points again and again and again and again. What I want you to focus on is if you're seeing an uptrend situation, right? I want you to focus only on buy opportunities. So the idea is we get in, right, the higher lows. Of course, if these higher lows meet certain conditions and there's some confluence in the market and you're getting multiple confirmations, right? Like it's going to be more ideal. All right, it's going to be more ideal, right? And in the downtrend, all right, we can see these lower highs are being created and lower lows. And if the market is downtrending, the idea is for you to focus more on the lower highs. Okay, this is the idea. And this is what most people are anticipating. Okay? However, I do want you to keep in mind AMD. All right? That's accumulation. Manipulation. And distribution. All right, so it ain't gonna be, it's not gonna be all perfect. Okay, it's gonna be imperfect scenarios the entire time. But I want you to anticipate this stuff. When the market is trending, be on the lookout for these things. If it's trending up, only look for buying opportunities. If it's trending down, only look for selling opportunities. Now, if the market is consolidating, okay, if the market is consolidating between, let's say, this point and this point, right? If it's consolidating in these points, right? You know, the ideal goal would be to sell at the high, buy at the low. But I want you to anticipate the manipulation because the banks already know that people are thinking the same exact thing. So what's going to happen is they're going to bring it lower before it goes back up. They're going to bring it higher before it goes back down. Now, is it going to happen all the time? No. But it does happen, and it catches everybody by surprise. So if you was ever in a situation like, damn, I got all my confirmations for a sell, I went to a sell and the market went the other way, right? It's because the institutions already anticipated you were going to do that. So I want you to anticipate the manipulation first. You know what you're going to do. You know what you want to do. But I encourage you to just hold it and wait for the manipulation first. It's going to be a little easier to understand, a little easier to keep in your mind rather than calculating order blocks, fair value gaps, and waiting for mitigation touches and all this other stuff, which all works, right? But for my people to just learning and really just want to keep it basic, remember AMD, accumulation, manipulation, distribution. Everybody is looking at exactly what you're looking at. So wait for the manipulation first and then come in right after. That would be the goal, okay? Let me clear the board for y'all. Okay, you can see certain things with your eyes after a while, right? But anywho, all right, we are here on the weekly, okay? Let's bring it down to the 4 hour. All right, let's pinch out. And I think what will help you, will help a lot of you out, is if you're gonna do some SRT lines, right? Depending on what time frame you drew them on, make them a little thicker so you know you're doing this on a HTF, on a higher time frame, right? So that will probably help you. We go back to the weekly for a second. And let me just make some of these other ones thicker as well. And this is a way how you could visually tell, okay, this is an SRT from a high time frame, right? 4 hour, weekly, daily, monthly, those are high time frames. Most popular ones are going to be your 4 hour, your daily, and your weekly. Let's bring it down to the 1 hour. Same way how art is subjective, so is your analysis. Sometimes you don't have to connect the tops all the way. Sometimes you don't have to connect all the tops on the way down. Sometimes you could just use your eyes and just go right through it, whether you're going through it right through the middle or whatnot. But to me, this is the main high point, and some of these ones that kind of go outside of it is a little bit of manipulation, right? Because they could tell where you want to enter cells. They could tell. right? So if it goes a little outside of it, to me that's manipulation, which is a good thing, because we want to anticipate the manipulation. Everyone knows they're going to want to sell during the downtrend. They want to get in on these, lower highs on the way down. Okay, but everyone's a little different. Art is subjective, so is, your art on the charts. Okay, so here was a low. It was broken. Okay, this is broke. All right, and most likely, whenever you see a break, it's going to be a retest to this level. And just remember, X marks the spot. X marks the spot. So when you see the market, downtrending here, right? But at the same time, kind of goes astray, and it kind of develops kind of a little bit of an uptrend on the way over here, right? Now you got a little bit of an uptrend, a little downtrend. When that X forms, a breakout is bound to happen. And being that there's so much bearish force, I'll be betting on the overall trend, right? For example. Let me erase some of this stuff. All right, so X is going to mark that spot. We are on the 1 hour. Let's pinch out. To me, this is weak as hell, right? These lows over here are pretty weak. Overall trend is down. And you know what they say, the trend is your friend, so it bends. All right, so once I do my SRTs, right? Now I'm going to zoom in a little bit. Once I do my SRTs, the next thing I'm going to do is I'm going to bring up my Bollinger Bands. I love the Bollinger Bands. Let's go in here and let's use my Bollinger Bands. And you can adjust them as you see fit. John Bollinger created the Bollinger Bands. And usually the market stays between the top and the bottom band 90% of the time. So whenever you catch candles outside of the bands, those are strong potential reversal points. Okay. There's one right here as well. Okay, so we'll see these strong reversal points appear, and you can see it over here. You can see it right there. All right, if you have a wick that pierces these levels, all right, it's very telling. Okay, because the wick pierced the level, all right, that means that was a quick liquidity grab, right, and that price rejected. So it means both. Okay, it has double meanings, right? Now, whenever we have this, all right, we have one confirmation. We have the Bollinger Band confirmations. All right, you can edit the bands the way you would like it. All right, because sometimes, believe it or not, when you put your own charts together, and because it feels good, because it makes more visual sense to you, you'll actually start to do a little bit better. There's actually some there is psychology behind colors. I'm not going to get into it today, but there are some psychology behind color. So when you see red, automatically you're thinking sell, right? When you see green, automatically you're thinking buy. So there are some psychological effects using colors on your chart. So you could keep it neutral. That way you're paying attention directly on price action, right? And you're not letting your brain get tricked into buying or selling just because you see red, 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 or green, 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 or blue, 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 depending what color schemes you use. So in this case, my upper band, I'm just going to keep it white, and my lower band, I'm going to keep it white. That's it, okay? And background, I don't really need a background on this. All right, keep it real simple. It doesn't have to get crazy. All right, these lines, I just keep it on the line, on the regular line. You can make it thicker or less thicker. You can give it some transparency or no transparency. It all depends on what floats your boat, what works for you, okay? And then I like to add some additional, indicators, because one confirmation is just not, it's just not it. You want multiple confirmations. Now, although you could get busy on the charts without using any indicators and just using your SRTs, or even using one indicator, you want to get confluence from multiple indicators just so you can make sure, right, that you can see certain things play out. All right, so let's go with the stochastic. All right, and also the RSI. They greatly improved the RSI over the years. They got some more effects to it, so some gradients. Once the market goes into the overbought zone or the oversold zone, supply and demand kind of stuff, right? So the demand is the lower point, right? So think of support, and supply is basically the resistance, right? Okay. Now, again, other beginner traders, they're going to be seeing the same thing you see. They're going to go in trading at the same times. The institutions know this. They're going to take advantage of it. You're going to want to anticipate that manipulation, but let's go through some of the rules, okay? You might have one indicator that doesn't indicate the market is going up or down, and that's okay. Treat your indicators like if they are a member of a jury, right? Majority rules. For the most part, majority rules. If you have 5 indicators and 4 of them are indicating price is going down, majority rules. Go with the majority, okay? All right, so we got the Bollinger Bands attacked. We got the RSI, which is the Relative Strength Index. We have the Stochastic Oscillator. It's going to give us similar things. It's going to let us know if the market is overbought, oversold. When you get that cross, that's also a signal for a potential position you could take, and whatnot. So you can adjust your settings accordingly. You can keep it at the default levels. Either way, there's no right or wrong, answer, okay? What I'm going to do now is we're going to shift this and bring this to the 15-minute, okay? We're going to bring it to the 15-minute. Let's narrow this down a little bit. I'm going to narrow this down. All right, and I'm going to pinch out so you can see it better. Let me bring this in, and let me bring this in. Again, adjust your charts in a way that makes it easier for you to be able to tell what is going on. All right, so now that we've did a top-down analysis from a high time frame to a lower time frame, right? We can see certain things, play out. Okay, you can use a vertical line as well to make sure that you have your confluence with everything. So for example, right over here, all right, we got 3 confirmations for buy just right here alone. All right, we have a support level right over here, okay, that's just under these bands, and a wick there, okay. So right here, all right, this would be an excellent opportunity for a buy. And so when we zoom in and we take a look at what happened over here, we see, yes, the market has went up from here. Okay, let us use a long position tool. Long is another word for buy. So we're going to use this buy position tool right over here. Okay, and so when we're looking at an entry on a 15-minute or 5-minute, but we did a top-down analysis, right? Ideally, we want to capture ourselves, at least 50 pips. They say 50 pips a day keeps the 9 to 5 away, right? 50 pips a day keeps the 9 to 5 away. So let's say we go for 50 pips right over here. Very doable. As you can see, it was already done. Okay, let's see the highest point it went. It looks like it's a little over 100 pips over here. Yep, it's the highest point right around here. Okay, like 130 pips. But ideally, we want to keep it simple, right? Say we went for that 50 pips. That was an easy bag, right? Because we took our time. We took our time, okay? We took our time with it, all right? Let's look at the risk to reward ratio. 50 pips, 25 pip risk. All right, that's a 2-to-1. 25 pip risk for a 50 pip gain. All right, basically about a 25 pip risk for about a 50 pip gain. That's a 2-to-1 risk to reward ratio, right? And so when we see this, there are other opportunities currently happening in the market. Okay, right now we can see, we marked this. Okay, we marked this before. We know that there's a potential resistance level. Look what happened. Outside of the bands, crossing down a resistance level right over here. That long wick tells you that was a liquidity grab. Right over here by a round number 141.000, right? 141.2000, right? Listen, these round numbers are very telling. All right, let me switch the color on you, or let me do highlight red, so it's not too, the contrast isn't too crazy on the chart. But peep this. Look at these round numbers and how they affect, right? So keep institutional principles in mind. Just keep it in mind. Look at this. Bam. Bam. The markets be reacting like crazy. Okay? 140.600. It's another reaction level. Okay? These are round numbers. Okay? This is what the institutions be looking at. All right, let me take out the drawing tool for a second. All right, now beat this. Short position tool. Once the manipulation finished and it started to come back down, right that cross of the Bollinger Band, I would have went, you know what? Let's go for another 50 pip joint. And that would have been fair. Right? So we know there's a point that we want to sell. We know that there's a point that we want to buy, but we're going to wait for the manipulation. All right? We're going to wait for the manipulation. If it touches it a little bit and then it crosses back up or down the Bollinger Band, then we're going to look to take it that way. But first, we're going to look for the market to go the opposite way, so the banks could, get their little bread and whatnot. All right, and then we're going to go along with the market correction, right? Right over here is another opportunity. It kissed this bulge, man, right over here. All right, 25 pip risk, 50 pip reward. Is it possible? Yes. Very possible. All right, very possible. Kiss this, and it's going for that. Remember, let me bring this back. Okay. Accumulation, manipulation, distribution. This is the bullish AMD. Now, over here, accumulation, manipulation, distribution. This is the bear AMD. So when you're trading, keep the institutional principles in mind. It don't even have to be the strict principles like I showed you last week. Last week we went in. Y'all seen it. We went in. I put all the visuals together. I took pictures from all over the internet, and I put all the visual resources together to teach you in a lesson, right? Today, we're doing it on the charts. We're looking at this on the charts. But I will say, be on the lookout for the AMDs, okay? The banks are betting on you to do the same stuff every other beginner trader is doing. So anticipate the manipulation. Anticipate it, right? And you're already gonna do better than the rest. You're already gonna do better than the rest. We're gonna pay attention to these things, all right? We're gonna pay attention to these levels, all right? Let me take this out. Let me take this out. Sold already, okay? All right. Wick to wick. All right, market is always giving us a story. It's always giving us a story, okay? So you can see certain things play out. Here's the market going up, okay? Coming back down, going up, coming back down, going up, coming back down. All right, it looks to me it's a little more flat over here, so it's accumulating, all right? Here was distribution, here's accumulation, right? Keep the round numbers in mind. These are high reactionary points. We're going to be all right. This is what I believe. This is what I believe. Right around over here, 140.800, we're going for sell. So here's the signal that I'm going to leave tonight. I'm going to leave you with a signal tonight. This is it. All right, and let's... This is what we're gonna wait for first. And let's do 30. So instead of 25, let's just do 30. And I'm gonna go for a 3-to-1 risk reward ratio. Actually, let me see. 786. I'll be fine with that. Nah, all right, we'll keep it. All right, we'll keep it pips based. All right, so 30 pip risk for a 80 pip gain. Okay, 30 pip risk for 80 pip reward. Okay, now here's the deal. Don't enter this now. Wait until the market goes above, all right, this level. Wait until the market goes above this level. And then we'll strike. Let me actually, you know what? Hold on. I'm going to adjust it one more time. There's something I'm looking at right now. All right. Here we go. 141. 141. All right. Boom. A little more tighter. All right. Look, I got it right here by the 618. All right. It's a little bit more tighter on here. Okay. All right. So the idea is wait for the market to go past this first. All right. Let it go past this first. Okay. This is going to be a sell stop. After manipulation. It's going to be a sell stop after manipulation. So basically, we're going to wait for this to come above the entry point, and then we'll do the sell stop. So that way, when it's ready to come back down, boom. All right, it'll activate on the way down. We're going to wait for that manipulation to happen first before we go in on that. All right, so let me give you the levels over here. All right, so entry is going to be 141.000. That's the entry point. Stop loss 141.300. Take profit. It's going to give you a TP1. We can do TP2, TP3, all that good stuff, but that'll go along with the risk reward ratios, right? So if it's 2-to-1, you know, well, I actually have a little more than a 2-to-1 over here, but at 3-to-1, you know, make that TP2. At 4-to-1, make that TP3. All right. All right. And only you know what lot sizes you're working with. Okay. But here you go. This is just one setup for the night. And, you know, I showed you how I, you know, basically use this very simple strategy for simple supply and demand positions, but anticipate the manipulation first and keep these round numbers in mind, okay? Because those levels attract a lot of buyers and sellers. There's nothing on the economic calendar right now. So really, you know, the market is just going to be reacting at certain points as opposed to reacting to news, right? So I think that concludes, you know, this session for today. But what I'm gonna do, like I said, because I have promised you guys, I'm gonna give this opportunity for Q&A right now. Yeah, so if I pull this over here, it's gonna have this crazy mirror effect. So let me switch the camera on y'all real quick. All right. Let me share the screen. Okay. All right, here we go. All right, ladies and gents. So, real quick, if you have a question, all right, if you have a question, all right, feel free to ask. Does anyone?
You gonna start trading every day?
What happened,
Or
brother?
is this like you gonna start trading every day, or is this like a couple times a week type shit?
I'm gonna be trading. Well, as far as this group goes, on Mondays.
Okay, thank you.
Yeah, and then sometimes I do some stuff on Wednesdays, and as time goes on, I may just do more depending on what the feedback is like over here. So I hope you enjoy your experience.
Oh yeah, what was your name?
Ness,
All right, appreciate you.
appreciate you. Anybody has a question?
Yo, what Bollinger Bands you use? The what indicator specifically?
I use the simple ones, bro. I use standard Bolger bands. Standard deviation two, um, based on the 20 MA. So the Bolger bands is basically a 20 MA on a 2 period standard deviation. So just typical Bolger bands. I just switch up the colors because, as I explained earlier, colors got a lot to do with trading psychology. So by me having it on a neutral color, like top and bottom Bolger band at white, it actually helps me not be so biased in the market towards buys or sells. So that's the only thing. I just switch up the colors a bit.
Yeah, I get you.
Anyone else have any questions? All right. I hope you guys really enjoyed. I hope you guys enjoyed the session. If you did, type 777 in the chat. I'd like to see that. 777 in the chat. Okay, I see might be some questions on here. So I was looking at USDJPY. Damn, it would be a lot better if we could actually see. So you wasn't able to see?
Nah, bro, it was blurry. We were all trying to
Oh
get your
man, no
attention.
way.
Yeah, now we can see it like good, but earlier we couldn't really see shit.
Damn, that's crazy. All right, well we'll fix that for the next time I get on.
Yeah, I guess that other camera you had it before you switched it now. Now we can see it clear your
Yeah,
screen.
now you have to see it better.
Yeah,
Okay, okay. So when I put on the spotlight and all that, it came out blurry.
yeah, it was
Ah
just really
man,
blurry.
damn, that's trash.
That was
When I put up the replay, because I'm recording it right now, everything is gonna be shown really clear because I'm recording it through OBS, so I'm not recording it through Zoom. So when I post up the replay, it'll be clear for you guys. Anybody got any other questions? Or we good? We good?
where are you gonna have it so we can check it out?
Huh?
Where are you gonna have that replay at?
I'm gonna drop it in the chat.
And the alpha?
Yeah. Mm-hmm.
All right,
Yes, sir.
for sure.
All right, guys. So, okay. So, guys, I'm a big fan of using tools, using systems, using all that. Next week, I'm gonna be sharing with you some of my trading templates on TradingView. So, it's free. If you guys want, you guys can go on over to mineonbillions.com. This is my website. And I'm a big fan of using market tools, right? So if you go over here to mineonbillions.com, this is not a broker, an exchange, it's not a prop firm, nothing like that. You can literally just go right over here to trading strategies, right? And all the ones that are not starred, these are trading view templates you could use and enjoy it. So for example, let's say I go over here to Blue Magic Pro, for example. All right, you'll see this pull up like this. These are systems that I create, but it's totally free for you guys to use and attach to your trading view. Okay, so feel free to download these free templates. If you already have TradingView, you guys are gonna really like it. So I have 1, 2, 3, 4, 5, 6 TradingView templates you guys can enjoy for free and play around with. Some of these indicators that I use on these templates are real interesting. So I think you guys are gonna like it, and it's totally free for you to download. All right, so mineonbillions.com. Take a look at some of these free templates that I got over here for you guys. All right. So guys, stay blessed, take care, and I'll see y'all next week. All right, let's get it. Peace.
Most definitely appreciate you.
Appreciate you guys.
Thank you, bro.
You're very, very welcome.